Today's top stories at NBR. Rocket Lab christens its third launch pad and reports 77% year-on-year revenue growth. Recovery this year more protracted than last year. Changes to government support package for hospo asked for. And there's more coming right up. Kia ora and welcome to NBR Today, 100% subscriber funded and proudly brought to you by you, as is every story at nbr.co.nz. It's Tuesday, March 1st. I'm Paul Brennan. Thanks again for joining us. CFD provider CTRL Investments has been censured by the Financial Markets Authority for breaching its derivatives issuer licence. The company, previously known as Mahi FX, offers contracts for difference, giving traders exposure to assets including currencies, commodities and shares. In a statement, the FMA said CTRL had materially contravened two standard conditions of its licence by failing to comply with requirements for outsourcing arrangements and allowing clients who did not understand the risks of derivatives to trade. CTRL was screening retail investors for their understanding of derivatives. However, in some circumstances, if a client could not demonstrate the necessary skills and knowledge, CTRL merely provided a warning statement and suggested the client not continue, FMA Director of Supervision James Grigg said. Rocket Lab christened its third launch pad this morning, Tuesday morning at Mahia, and announced it will build yet another at Wallops Island in Virginia, which will be the base for manufacture and launch of its new Neutron rockets. The news came as the Peter Beck-founded company, which joined the Nasdaq Stock Exchange last August, reported 77% year-on-year revenue growth, up from US $35.2 million in 2020 to US $62.2 million in the year to the end of December 2021. Net loss for the year was US $117.7 million on adjusted EBITDA of US $43.9 million, compared with a loss of US $55 million in 2020 on adjusted EBITDA of US $40.3 million. Chief Executive Beck said on Tuesday's analyst call that he was particularly proud to report that the company's backlog of confirmed customers and contracts signed had grown from US $82 million at the end of 2020 to US $545 million as of today, Tuesday. The Omicron outbreak and higher interest rates are expected to ensure the economic recovery this year is more protracted than that experienced after the 2020 downturn. In its latest quarterly predictions, NZIER is expecting annual growth of 4.9% this year and 3% next year. That compares with a drop in annual growth of 2.9% in 2020 after a 10.3% contraction in the 3 months to the end of June 2020. By the end of June 2021, annual growth was back to 5.1%, then recorded 4.9% annual growth in the September 2021 year, even though it contracted by 3.7% in the 3 months to the end of September. NZIER principal economist Christina Leung said given the contraction last year was less severe than in 2020, that partly explained why the bounce back this year might not be as strong in relative terms. NZX-listed infrastructure investor Infratil says it's considering a sale of its 50% owned Retire Australia business. In a statement to the NZX, Infratil said it was planning a strategic review of the business in conjunction with the NZ Super Fund, owner of the other 50%. Retire Australia has 28 retirement villages in New South Wales, South Australia and Queensland, housing 5,000 residents. Yael Shochat at acclaimed Auckland inner-city eatery Ima has asked for a wage subsidy to get hospitality providers through the Omicron wave. She was speaking at a webinar yesterday, Monday, by a new support group for the hospitality sector called Last Call. She said, all the money the government has put into us in the last 2 years, if we fail in the next 8 weeks, then where's all the money gone? Speakers included hospitality operators, a seafood supplier, and politicians from the Green, Labour, National and ACT parties, as well as a targeted wage subsidy to retain staff. Speakers and commentators on the Zoom chat function asked for changes to the government's support package for Omicron-affected businesses. It's pretty hard to be 40% down on dreadful, said Vivace restaurant managing director Mandy Lusk. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, the kiwi fruit industry is bracing for the impact of a COVID outbreak, while Dita DeBoni's Flipside column assesses an Auckland mayoralty candidate's free public transport proposal. I'm Paul Brennan. Join me again from around lunchtime tomorrow for the morning's NBR trending stories, then again from 5:30 right here for another NBR Today.